Is it or is it not a long winter that's brewing for the startup ecosystem? Can we call it the deep freeze? And I'm sure that my panelists will completely disagree with the topic. So with that, let me introduce Ritesh Agarwal, founder and group CEO, Oyo. Bipin Preet Singh, managing director, co-founder and CEO, Mobikwik. Kaivalya Vohra, co-founder and CTO, Zepto. Ganesh, serial entrepreneur, partner, growthstory.in. And Rahul Garg, CEO and founder, Moglix. And they'll be in conversation with me. I'm Aabha, senior editor at Business Today.
So firstly, I feel very awkward with this title because I know two of the people on the panel have just raised another rounds. Two of the other people on the panel are actually going in for IPOs. So, we're really primed here to understand what's happening in the startup ecosystem and whether all the noise we've been hearing around recent listings, new rounds of fundraise, corporate governance, how much really to read into some of that and where India's ecosystem is poised at the moment. So, Ritesh, let me start off with you. And you've got this big smile on your face because travel is booming like never before, I know. But tell us, where do you think we are? What kind of inflection point is this for the ecosystem and for the Indian economy?
Sure, thank you. Thank you for having me here, Aabha. I thought that we'll go the other way around, but I don't mind getting started. We probably got together 6 months back, or few months back, for the BT budget roundtable. And travel was just about getting started. And there was this conversation about saying, we are in the Omicron wave, is this going to continue? But I must tell you that, look, I think in the startup ecosystem, every couple of years, there will be some sectors that will do extremely well. Some will go through some challenges. People who use those challenges as opportunities will come out stronger in the next couple of years. So we went through challenge during COVID, no questions about that. But, I think, like I was telling Rahul earlier, ye to apna time hai. I think travel is coming back very strong. We just finished May with, I think, some report said 1.7 lakh bookings every day, just here in India, and growing. So I think on one side, you hear all these issues of macroeconomic challenges. On the other side, you see travel like never before. A lot of people here have taken flights. A lot of people here have planned their summer vacations or have taken one and know how hard it is. It's almost impossible to get hotel rooms if you want to take a weekend plan early during the week. So I think travel's coming back very strong, and I believe that companies who in the last 2 years used this period to be able to design their businesses with better cost structures, better economics, etc., are taking this advantage for all the top line that's coming. A large part of that flows to the bottom line. So big picture, excited about the growth in the travel ecosystem. But really, I think it is not just travel, but all the reopening companies. So whether it is restaurants, whether it is two-wheeler companies, anything that has to do with reopening, which is COVID negative in some way, you will see that continue to drive growth in times to come, is my belief.
Okay. Bipin, let me get you in. And, everyone says that the financial sector has to do well if the economy is going to do well. That's really where we're going to see the maximum evidence of demand and pickup. What's your reading of the current situation?
Yeah, of course. I think financial sector is one of the biggest sectors in India, even if you see the listed markets. And the same thing is replicated in startups and in private companies like ourselves. And there's, obviously technology in a country like India has to play a significant role in penetration of financial services across the board. Because we are not a country where we created a very large banking infrastructure or a physical banking infrastructure or a card infrastructure over the last 20, 30 years. And all of you have witnessed the kind of growth that has happened and change of customer behavior that has happened in the last 10 years, where people are using different kind of payments, and whether it is payments, whether it is digital lending, whether it is managing wealth, or whether it is just buying insurance. Take any financial service. The leaders in that space will eventually be technology players, because even technology is the only way it can scale. So of course, I'm very bullish on the financial sector, and I think we grew 86% last year, year on year, and we hope to replicate the same. And I think overall sector, if you see the way it is evolving, is that the partnerships between banks and non-banks is actually leading the path in terms of where the sector is going to go.
So are either of you worried about the current geopolitical, macroeconomic picture, market volatility specifically, since you both have IPO plans that are slated for whenever things are possibly better, or any other details you'd like to share with us. But are you worried about the current market volatility?
Yeah, actually, no. I think, see, I have been running this business for more than 10 years, right? One true reality is that, after every winter, there is a summer, and then there is a spring, and then there is winter again. So that's the nature of life, and that's the nature of business also. And I think markets behave in a certain way because of global macros and all. I think fundamentally, if business has long-term value and has long-term growth potential and has margins, and I think in a country like India, fintech surely has, then these are temporary concerns. At the end of the day, this is, after 3 months, we'll be holding a session, we'll be saying what is happening, why is so much money coming into India, and so on and so forth. So I think these things, the same thing that was happening last year.
And Aabha, my view is 3 things, right? The first is, if I were to look specifically at business, I think so far I've not seen that impacting business. We've just come out of COVID, where effectively, our hotels were not doing business for a long time. So I think travel is coming back very strong, and OYO, with the perspective of being a market leader in travel, is getting benefit. I was in Banaras last week, and I struggled to book a room for myself in an OYO because just the whole city was sold out. So I think that's the first one. Second is, clearly there are macroeconomic concerns. There is no taking away from that. But I believe, that said, good companies will continue to remain attractive regardless. I don't think that's going to change. And last, but probably one of the most crucial things, is our IPO update. I think our perspective is our results will be dramatically different for first and second quarters of this year than it were probably a year back. So our hope is to try and bring those results, and our hope is by the time you'll also see a lot of the rate increases, etc., sort of be more streamlined. That's probably the time we'll probably look back at a potential consideration.
Fair. Ganesh, I'm going to jump to you because, he talked about seasons, and we were just discussing that. I asked Ganesh, is this a deep freeze? Is winter coming? And he said, look, it's seasonal. I've seen this many times. How is it different this time around?
Yeah, so one of the advantages of being bald and old as compared to all these youngsters is I've seen this play out repeatedly again and again, okay, right? Whether it's a dot-com boom and the bust in 2000, or September 11 happened, Lehman Brothers happened, something or the other always keeps happening. And that's how I end up losing all my hair. Otherwise, I was as smart and had as much hair as most of the people here, but this went away in last 32 years of startup. So firstly, I think there is a lot of sensationalism that people attribute to. Okay, right? And I blame the media, not necessarily India Today Group or the Business Today Group or Saurav is sitting there.
Every time
next time you'll not call me. Next time you'll not call me. So I'm not going to. I'm not. This group is excluded. But media sensationalization. Oh my God, 10,000 jobs lost. Listen, total startup in the recent layoff, 10,000 jobs lost. Do you know how many jobs were created as per DPIIT registered startups? And President Kovind had quoted this number of 6 lakh jobs were created by DPIIT registered startup. I would presume that most of the startups don't register with DPIIT. It will be at least 12 lakhs jobs would have been created. Okay, we are talking about less than 1% of job loss during all this period. Double it to less than 2%. 4 times less than 4% of the jobs created. But here, I forget what's the name that they use for professional mourners, okay, right? There we have this concept in some of the societies that when there's a death takes place, you hire professional mourners to come and go on mourning for a fee. I mean, like that, some media, some armchair critics, some people are going on creating this sensationalism. I think none of it is really warranted. What is actually true is, last year, we saw a huge euphoria. We had huge amount of funding, okay, right? Large number of startup, high valuation, high funding, high ticket sizes, Tiger or other people across the board over Zoom, writing checks or sending, transferring, all that. So we had overeating, gluttony in the last year. So compared to that, this looks like real deep winter. Again, to quote from P.B. Shelley, Ode to West Wind, when winter comes, can spring be far behind? Okay, right? So the thing will take place. Obviously, what it means is that there is a challenge for companies which are in a Trishanku stage. That means if you are a company that was planning to raise capital in the January to now, January to July or January to September, if you are running out of money and last 2 years was planned on closing the funding there, because of the sudden drop in the velocity, in the valuation, and people taking a pause, you will be in trouble. Minus for those companies, there is nothing that has changed. In fact, like you mentioned, this is the time to start new companies. Salaries are lower, expectations are lower. All of that is extremely positive. My heart goes out to people who are in that Trishanku in-between stage. They will have to do deep cuts and things to come out of it. I'll also add one more thing. One of the things that I have seen in even earlier cycles is, like last year, whenever there's huge valuations, big checks, sudden this one comes, over Zoom calls funding comes, they come from crossover funds typically. Funds typically that have a public market exposure and a private market exposure. Now these crossover funds, when the public markets goes down as it has happened, in order to balance out, their private investments also suffer. So this is a collateral damage. Again, I know this does not satisfy the people who are caught in the Trishanku, they are in trouble, but it's a collateral. This will go away. Otherwise, the hardcore venture capital funds, they have raised huge amount of money. Where are they going to deploy? They are going to deploy here only. They have to deploy in startup. They can't go to public markets. They can't put it in fixed deposit. That money has raised, they're sitting down. So wait for 2 months, 3 months. But talk sensibly. Because when you're raising money, you have to talk what people want to hear. They want to hear profitability, path to profitability, not market share, not burn, talk all of that stuff. You will succeed. There's no doubt about it.
So let me get Rahul in on this. As someone who's just raised yet another round and not very long ago, just very, very recently, did you talk sensibly in that round, Rahul?
So I think we have been in the unsexy sector, and it was actually very exciting because we work with the manufacturing and infrastructure companies across the length and breadth of the country. So when someone receiving the award, I think SNS mentioned that it's great to have awards being given to manufacturing, mining, and many of those industries. I think these industries are the backbone of our economy. So I think over the last 7 years of our history, we have always been cheering for the backbone of the economy. And therefore, we have never been overboard on saying that this is going to be like 20x jump suddenly because we'll burn $100 million on marketing. I mean, it's a steady business being built on a strong fundamental macro of the country. So I think we attract investors also in that manner, that we don't have to ever give a crazy thing. And I remember from the first round, because Ganesh mentioned Tiger Global, which is also on our cap table for last several years. And I spoke to them when we were raising the last round, and they've been investors since 2019. We picked up the Excel sheet which we had given them in 2019, and we said that this is now 12 quarters we are starting to be out. And actually we have hit all the numbers 12 quarters out, which was shown in the Excel sheet in 2019. Because, and one of the reasons we were told that we were able to do that was because there was never a banker in between. We were always making Excel sheets for ourselves and giving it to the investor. So I think as long as founders safeguard themselves from giving the reasonable expectations, not ballooning it because it seems to attract a certain style of investor or expectation of investor, I think we'll do a phenomenal job. And I think this year is actually going to be a boon for the Indian startup industry, I believe, because many of those who may not have got enough time to fix the plumbing, as we call it, get some of the economics right, probably have less competition. If the space has too much competition, too much VC money for burning marketing dollars, you suddenly have poor balance sheets, so on and so forth. So I think it's going to be a boon for Indian startup industry because you will have right expectations of founders, right expectation of VCs, and build the company in a proper manner. So I think it's a very exciting times, I would say, for real entrepreneurs, building real companies, not building companies because there are 10 other people doing it and they want to be another 11th guy doing it because there's VC money available, so on and so forth. So I think very exciting year.
I just wanted to add, this is amazing to hear. I have never in my life ever seen Excel spreadsheet given some time back actually proving out to be true. This was the first instance of it. In fact, they say there is more fiction in the Excel spreadsheets made by founders to investors than whole of English literature. Okay, so this guy really deserves an applause for for doing that. On the other hand, I think he undersold himself. Okay, right? Okay, right. Because investors take the optimistic projections, then they discount it, then value it, then do all that stuff. But obviously, it's great to hear and a great example.
So we have two of India's very young headline entrepreneurs with us on the panel as well today. Ritesh was many years ago, and everyone was marveling at his story. And Kaivalya today. Talk to us a little bit, tell everyone a little bit about your journey, because it's something that's still new for many.
Yeah, sure. Thanks. Firstly, thanks a lot for having me here. Super excited to be a part of this panel. We started Zepto about 10 months ago now. What we're doing is essentially quick commerce, 10-minute delivery. Started out with groceries, expanding to a couple new categories. It's been pretty fun, I think. When COVID really hit, both Adit, my co-founder, and I we were marveling at this problem of grocery delivery because we had spent some time abroad and we saw that, okay, this is a fairly solved problem, but then why did all hell break loose in March and April of 2020? Is there anything we can do about it? And so spent some time experimenting with different models of grocery delivery, and then eventually sort of stumbled on this whole dark store, quick commerce, 10-minute thing. And just ran a couple of pilots, seemed like customers really liked it, figured out a way of making it work operationally, obviously with good unit economics, and then started scaling from there. I think since August last year to today, we're now in about 10 cities in India, so the top 10 metros. And I think on the whole, things are going well. I think as COVID does start to wane off, I think one of the things that won't really change is some of the habits that have been formed around delivery. I think the convenience that not just us, but in general, delivery companies were able to provide to Indian consumers, I don't expect a lot of that to change. I think those habits will probably stick around for some time. But that's a little bit about Zepto.
So what was your funding requirement to expand into 10 cities at such a fast clip?
Sorry, can you repeat that? What was that?
What was the kind of funding you needed in order to grow so fast and expand so quickly?
I think so. Initially, we didn't raise a lot of capital, and I think that, in hindsight, that was a great thing. At the time, we were like, oh man, all of our competitors have so much money, right? But initially, we didn't raise a lot of capital. We just had this one micro market in Bombay that we started with, and really spent quite some time there perfecting the model and really trying to nail both the customer experience and operationally the economics as well. Once we were at a point where we were demonstrating both sides of it, that customers love it, they're retaining, they're ordering 2-3 more times a week, and consistently getting exactly what they ordered, good quality produce, and getting that in that committed time frame. Then we said, okay, let's try to scale this up and continue to scale it up while maintaining the same level of operational rigor. And once we were able to show that in a couple of markets is when we started to say, okay, this works, right? Now let's it was pretty easily demonstratable, and so we spoke to a couple of funds, and then I think around last year, September, October is when we started really fundraising, and since then I've raised a couple of rounds, and things are going pretty well.
All right, so shining example there of the ecosystem, but it is these companies and these entrepreneurs here that we have with us on stage that are really driving India's new economy and growth going forward, significant contributors to that. Ritesh, I'm not going to ask you all the questions I've asked you all these, months and years. I'm actually going to ask you forward-looking, because as a critical part of the growth story, where do you see India's new age companies when it comes to the map going forward? How much of a growth trajectory do you see? How much do you see them cementing their position in the, like today we had the best CEO awards, but we still have a lot of the old economy names continuing to, of course, dominate that. When do you see that change?
I think, first off, thank you for asking me this question. By the way, just so proud listening to Kaivalya. Just entrepreneurs, 19 now, right? Incredible. People like Kaivalya are setting up companies in 1 year.
And you were also 19, I think.
I was around the same age,
Around
but now
the same age, yeah.
now I'm way older than that. But you know, just huh? Yeah, I think Ganesh is probably the only millennial on the panel still. But you know, look, I think, and you know, I must tell, Ganesh has also been a great cheerleader of the ecosystem. I think right from when I started, you know, he was always generous with his time. And you know, he's a friend in the toughest times. When businesses are growing, when Oyo was growing like never, life was good, no problems. But whenever we had troubles, Ganesh would be the first one who will pick up the phone and say, don't worry about it, focus on your customers. You do that well, you'll come out strong, as we have seen after COVID as well. But look, I'll say just 3 things, right? See, the first bit is, I see fundamentally situations like now, as Rahul also mentioned and others mentioned, this is a time to really hunker down and focus on building companies rather than focusing on what everyone else is doing. So this is the time to get your unit economics right. This is the time to, like if you remember pre-COVID, we used to have some of our complaints from our hotel owners. So for 2 years, every month I ran owner town halls, and every month our releases were just focused on what can we do to improve it. As the market's coming back, we're able to take advantage of it. I'm sure all the companies who are going through this, winter, as you call it, I think will probably take advantage of it. So that's the first one. That is, I believe, if used right, a lot of companies will be successful, and you will see more profitable unicorns than the number of unicorns. So currently you see 100 unicorns. I think next year you'll see the percentage of profitable unicorns be significantly higher, is my first belief for the future. I think the second belief I have is growth, in my view, is just, will be unidirectional. Because see, good news is, and Minister Goel was mentioning 2 things which I noted. One was, VUCA se Yuva. And the other one was inflation tolerance limit of India versus where we are at today is actually disproportionately lower than that of the tolerance limit in various countries around the world. And I'm sure that that will lead to better economic outcomes, which is already visible in GST collections, job reports, and so on. This, in my view, will have a direct impact in terms of startup growth. And hence, the last perspective is, I believe, as we have more profitable unicorns, as per the PwC report, you will have more young entrepreneurs come in and receive these awards in times to come. That's my three-legged answer. But look, I think I must finish by saying that it's very inspirational what all these companies have done. I don't think that we should distribute between young companies and older companies. I think we should just distribute between innovative and hungry companies. And I think, all the award winners are darn good giving a competition to the younger entrepreneurs out there to do a better job. So we will all have to step up our game as well.
Absolutely. Ganesh, I want to bring you in here because, of course, talking about profitability is key. But along with more profitable unicorns, do you actually see any kind of filtering or any of the companies that perhaps have inflated valuations, inflated numbers, have perhaps reached where they have, but not on solid unit economics? Do you see any danger of those companies going belly up? It's a fair question because even from the old economy companies, we've had several stories like that.
No, it's a very fair question. And some of the companies that have reached unicorn or unicorn type valuation levels, either because of a hype or euphoria or because of a COVID push also, okay, right? Once the COVID impact has gone away, just like we have seen in EdTech also, okay, right? That the people go back. And even we saw go up, the volumes has come down post that because a lot of people were there. So the question is fair. Will they go belly up? I don't think so, because if they have raised enough money, they have enough valuation, they have enough runway to be able to use a cliche, pivot or correct or change the model and adjust to the new behavior, post-COVID behavior when it comes up. So it won't go belly up. Will the valuation, unless and until you are selling, and I'm sure the founders will agree, unless you are selling, valuation is a paper number, okay, right? And in startup, I'm sure all of you who are involved in startup knows, there's a very fine, thin line which we tread every day between huge euphoria to deep gloom and doom. Okay? Whether the valuation is right, we don't know. And I can tell you, definitely, I can tell you with respect to Big Basket, with respect to Homeland, Portia Medical, we were just months away from running out of total cash. months away from running out total cash. So that is the nature of the beast. So will valuations correct? Yes, valuations will correct. Is anybody going to cry because valuation corrects? Nobody is going to cry. Okay, right? Because after 2 years, you will raise money at a higher and higher valuation. Okay, right? So I don't think there is a structural issue. But having said all of this new economy versus old economy, the award winners versus new thing, I must say this. See, the traditional way of running the business, open a store, make profit, take the profit, invest in next store, take the profit, invest in next store. You do it over decades. You have the time, you have the luxury, you do it. That's the right way of building the model and all of this. So even Infosys was built profitably. The new age companies, venture capital funded companies, the founders of venture capital funded companies who raised money from venture capital, all of it subscribe to a different thing. Venture capital have a 7+1+1 or a 7-year time horizon. They can't wait for that brick by brick by brick by brick. So they have to get the same thing done fast. As founder, when I sign up when I take money from venture capitalists, I also align myself to the same thing. So there is a certain hurry, there is a certain urgency. You buy market share, you give discounts, you crank the flywheel by burning the capital you have raised. So nothing wrong in that. In that cycle, if there is a sudden break, it will create all these challenges, which will not happen in the traditional company, which is going store by store by store.
Sure. So Bipin, let me ask you, as someone who's been, growing this business now for 10 years and has possibly seen some of these cycles, let's give credit where it's due. We've seen some of these companies grow to enormous scale and, have been listed over the last year or so on the exchange, and that's, fair credit. But there's so many questions and, still the jury's out on whether or not those business models will survive. As Mobikwik, even as you await IPO, you're still going to be looking to raise another round or some more funding. It's been in the news of late. Tell me how things are different or what the current scenario is in terms of what kind of questions investors are asking, how much you think before going out there to raise the next round, how you see that adding to further value creation.
So I think, firstly, as entrepreneurs, we have to stop thinking just about valuation and think about value creation, like Ganesh was also saying. And value creation comes from, in multiple stages in startups. You start in an early stage with just an idea, then you get to a product market fit. Then you get to a business market fit, where you truly have business. And then eventually what is expected is you need to generate free cash flow, right? So I think every company needs to follow that path. And if they don't, eventually, they cannot survive. And so as Mobikwik, we've been focused on this. Of course, we are towards the later stages of this journey. And I think business today for us has been doing extremely well. In fact, business this year is doing much better than how it was doing last year. It's just that the market has obviously changed. And I believe that the market has changed also not necessarily related to any particular industry or any particular player. There are obviously global macros which are at work and different kind of factors which influence valuations and valuation multiples, etc. But other than that, I think if you talk about like fintech in general, every single company that I talk to are doing extremely well and they are growing very fast. In fact, for us, the last 2 quarters, we actually achieved profitability for the first time at EBITDA level for the last 2 quarters of last financial year. And, we hope to continue that this year. So as long as I think one builds a solid business and, I think the days of, I think at least this year, the expectation of 100%, 200%, 300% growth is probably one has to moderate. If you get to good scale and grow 30, 40%, that's still, one of the fastest growing companies in India. And I think technology companies, fintech companies, travel, etc., hopefully should grow at that kind of rate. And that should make sure that, eventually, if you need capital, the capital is available, right? And it will come.
Got it. Some great takeaways from the session. We only have a few minutes left, sir, but I do want to get another closing comment in from both our other entrepreneurs as well. Kaivalya, in terms of you're a very young company still, does any of this talk make you nervous? Is the future looking very bright? What is on your radar going forward?
Good question. I think, I think on the point of this funding winter, etc., right, I think the last 10 years or so have been, on the whole, like a pretty enormous bull run, I think, and some of that is getting corrected. But again, I think like many of our panelists here today have said, the best companies will continue to do well. think for us in particular, from day one, like I said, unit economics was one of the primary focus areas, right? And so, thankfully, as the macroeconomic scenario changes, life at Zepto doesn't change too much, right? It's not that we were throwing money at problems or have a crazy amount of fat to cut. And so, largely, things are BAU. I think, you talked about free cash flow. I think that's something that is a focus area for us as well. For us, it's slightly different though, because we launch new micro markets in different phase ways, right? Within a city, you launch new cities, etc. Right now, the focus area is, okay, the micro markets that we launched 9 or 10 months ago, right? How many of them are generating free cash flow, right? And so we're there, right? That's what we're sort of focused on. I think, and I think on the whole, like I said, it's not like a new focus area, something that's been there from day zero. And so, I think I'm excited about the future. I think the best companies the people who can execute the best will end up continuing to do well. And I think we're well within that bucket. And so, looking forward to the future.
Fantastic. Rahul, last word from you.
No, I think I'm super bullish, firstly, on the macro tailwinds which India has. I think we are we are obviously the largest democracy in terms of number of people, but I think from an economic power perspective, the voice in the world economy, voice in the global supply chain, I think India will become formidable over the next 5 to 7 years. I truly believe that. And I think, therefore, there is no reason, both for startups, old economy, we see more manufacturing capex. So I think, there's nothing really to worry about. I think as a country, we will just continue to do well, because we are starting still from a smaller base as a 3 trillion economy. And I actually believe we can be $10 trillion by 2030. I continue to believe that, while I know there are ambitions, firstly 5 trillion and so on and so forth. But I do believe that we can be that strong economy. And it is once in, I think, unique opportunity over the last 3 decades that we have as a country to really capitalize and grow to that level. So I'm super excited and optimistic.
Wonderful, very exciting times as some of these wonderful tech entrepreneurs take India to the next level. A big round of applause, please. Thank you all.
If you like the video, do like, comment, share and subscribe.